I have to say what a bizarre economic condition we're in right now. On one hand, the inflation is surging higher and the Fed will raise rates to fight inflation. On the other hand, the economy is weakening with a poor outlook throughout 2022. This week's earnings report from PayPal, Facebook, and many other big companies are all projecting a lower growth rate and indicate the slowdown of the US economy for at least the first 2 quarters of 2022. Now, interestingly, when inflation is high, it usually indicates a strong and overheated economy, and that's why the Fed needs to step in and try to cool down the economy. But now from the consumer sentiment data, inventory data, and the company projections, we see a very different picture that almost contradicts with the CPI data. And we have our famous billionaire Elon Musk tweeting about the looming recession that could come as early as spring-summer this year. When he is asked when he thinks the next recession will be, he writes, and I quote, "Predicting macroeconomics is challenging, to say the least. My gut feel is maybe around spring or summer 2022, but not later than 2023. And Cathie Wood, the famous fund manager, has also been talking about the likelihood of an approaching recession in her recent outlook. I have briefly mentioned that in my previous video, so go watch that if you're interested. There are many more famous investors warning for the same recession. Michael Burry, Bill Ackman, and Chamathe. But why is that? Let me put this straight. The economy is slowing down, and yet the Fed is going to raise rates to further slow down the economy. What do you think will happen? A recession, very likely. Well, how did we end up in this situation? And how come the inflation is so high while the economy is weak? Well, you see, prior to the pandemic, our economy was already slowing down, but it got worse very fast because of the COVID. And thanks to the government giving out stimulus, the economy has artificially kept going forward. So it's like a patient going to the ICU and getting life support. And because of the life support, the patient has been feeling better. It seemed on the surface that the patient is fine and doesn't need life support anymore. But under the surface, the internal damage is not fixed. And if the life support were to pull off, high likelihood the patient is going to have trouble standing on its own feet. Our economy is right now like that patient on life support. And the internal damages are the supply chain issues caused by low productivity and low job participation rate. In a strong economy, we would like to see a higher productivity and a higher job participation across the broader demographic. But this is not the case at the moment. In PayPal's earnings call, it mentioned that the impact of Omicron and the effect of inflationary prices combined with lack of stimulus is having an impact on spending, and by extension, our business. This impact is most pronounced on our lower income cohorts and has continued into the first quarter. The persistence of inflationary effects on personal consumption, labor shortages, supply chain issues, and weaker consumer sentiment have led us to adopt a more cautious outlook. So, in another word, people got a stimulus, use it, and now finished. Going forward will be less spendings. This is also aligned with Cathie Wood's data about the savings rate drop to the level before the pandemic. Now, some people may say, well, just chill, no government would want a recession, and the Fed will bail us out once again if we are entering a recession. Well, I'm not so sure about that. I think the Fed is quite determined to fight inflation if they don't see any sign of inflation slow down. And make no mistake, the rate hikes are happening no matter what. The question is how many rate hikes they will do and how far they will push the rates. So looking at the stock market, I think the market is now starting to price in the recession along with the rate hikes. The previous jobs, I think, are mainly just pricing in the rate hikes. So there is high likelihood the stock market will drop even further in the coming weeks. Well, not financial advice, only a scenario to watch for. Just look at Facebook, a mega $900 billion market cap stock, literally shitted their pants by dropping 26% in a single trading day because of its poor future outlook indication in its earnings call. Similarly, PayPal dropped 25% in a single trading day because of the same reason. Well, folks, it is mad, and be careful buying the dip under the current condition because the dip could keep dipping. Okay, enough with the negatives. Let's also consider some potential catalysts that may change the market sentiment. We should pay attention to the January CPI data that will come out on 10th of February. If the data shows any sign of slowing down in the inflation, it could calm down the market quite much. But if it worsens, further sell-off is expected. I'm watching the market condition closely on this channel, so if you are worried or interested, either way, subscribe and turn on the bell for the time-sensitive updates, especially during these volatile times. And hit that like button if you want more of such content. That's it for today. Stay safe in the market, and I will see you in my next video. Bye!